What's up, everyone? It's Eric from Option Edge, and today I want to show you a trade in Apple I'm looking at. Apple has earnings in approximately 14 days or 2 weeks from now, and historically there's been a certain type of trade that has worked great for a lot of different tech names, and that trade, let's switch over, and that trade has been a diagonal spread before earnings, and let me show you what that looks like. So basically you're taking a 50 delta call, you're buying it, 14-day expiry, and then you're selling against it a shorter dated 7-day call that is further out of the money, 30 delta. And this has been a winning strategy. I've made videos about this. Basically, you're utilizing theta decay in a unique way where the long option doesn't really get eaten away by theta decay because it has earnings within the expiration date, and that earnings event keeps theta decay at bay, more or less, for the first week. And then we have our short option, which has a fast theta decay, which we want to decay quickly because we're short that, and we want our short option to decay in value and buy it back for a lower price. Sell high, buy back low. That's how you short. So you're getting the best of both worlds. We're getting a long option with very little theta decay, and then we're getting a short option with a lot of theta decay. And this strategy works for a lot of tech names and a lot of non-tech names as well. There's historically, before earnings, there's usually some sort of run-up in the stock. However, I want to take this one step further. Let's go back to the chart. Let's look at the kurtosis and the skew. I've made videos about kurtosis and skew. I'll link it somewhere, and how important that is. So I'm in Pattern Finder, which is a CML Viz product, and recently they released this statistical analysis of tail analysis and skew analysis, and I don't know how this is calculated, but I understand the idea behind kurtosis and the idea behind asymmetry of returns. Basically, your kurtosis is a measure of the fatness of the tails of a distribution, okay, and then your return asymmetry is are we getting larger positive returns than negative returns, okay? So when these are both added up together, more or less, you're getting outlier events that are happening more often with big returns to the upside, more or less. Like I said, there's a video I can link to that explains this stuff more. So what we're going to do is we're going to take the kurtosis here, and we're going to use it as a filter to get even better backtest returns. So if you see, our kurtosis for the year is well above 1, and our return asymmetry is also above 1. And then the 6-month is above 1, and so is the 6-month asymmetry above 1. All right, let's include this in our backtest. We already have one of the technicals for this trade also is that the stock has to be above its 50-day moving average, which is already built in. But we're going to take this screen one step further. We're going to go to the 1 year. We just want to see that kurtosis is above 1, okay, for the 1 year. And then we want to see the return asymmetry for the 1 year is also above 0. And then let's see. So our return jumped from 72% to 109%, and I just went right back. We also took a loss off of that. Okay, we filtered out one of the losses here. So we removed one of the losses, which helped our overall return. Anytime you can cut a loss is great. So this is basically it. It's a very strong statistical analysis that can really help giving you better returns, which is amazing. Let's look at another stock. Here we have Paychex Incorporated. Recently, the stock has been on a nice little tear. Let's check out the kurtosis and skew for this one. So we have the tail and skew analysis. You can see the year and 6-month has been pretty big here with a large kurtosis and a decent asymmetry of return. So now let's go into our backtesting software. So here over the last 3 years, this is what the diagonal spread would yield you, approximately 27% return with a 2/3 win rate. Okay, so now let's apply our parameters of kurtosis and skew, and let's add them here. And I just like to keep it to the year rather than 6 months, and we just want anything above 0. Anything positive. So let's check that out. Okay, wow. So yeah, you can see our return jumped up a lot, and we eliminated some of the losers out of that, and we went from a 66% win rate to an 80% win rate. So you can see that there's a lot of power in this analysis, and I'm going to be using it on almost all of my trades I take now.